All right, welcome to this week's 5 in 20. Hey, Brad.
Hi, Casey.
So we got 5 topics. We're going to cover that in 20 minutes. These are different things that we see in the journal. We happen to see, or I guess hear or talk about in client conversations. First one is what we're calling the know-nothing market. I saw this in the Wall Street Journal earlier this week, or I think it was maybe in last week. I love the intelligent investor column in the journal. It's
I wonder if he named it that on purpose or he was actually trying to be sarcastic.
No, in this case, there's some sarcasm there, but with Jason and his articles, I think they never disappoint. So he does a great job. But I find this one interesting because the know nothing market. So we have this almost like tulip mania. Do you remember tulip mania, Brad?
I do, because I read about it in a history book.
So, we look at tulip mania, where that's one of the first bubbles that formed the market, right? And everyone, even the nuns, were gardening to make tulips to then sell them on the tulip market because tulip prices were going through the roof. I feel like that's kind of what's happening with GameStop. That's gotten in the headlines, but there's a lot of other things going on too. That all of a sudden, a year ago, we were in a market where people needed lots of advice, lots of direction, because we were in a free fall for about a month and a half. And now all of a sudden, coming up out of that bottom, we're at all-time highs. And now all of a sudden, everybody knows how to pick stocks. Everyone knows how to invest all of a sudden. We're seeing record brokerage accounts being opened. And then now we have TikTok advisors. So these are kids really on TikTok giving investment advice, and to the point where this one guy, Jason profiles him in the office or in the article here. He has a TikTok, which is little video clips, TikTok video clips saying, "Hey, I just made $300 in the market. I don't know how I did it. I don't know what the heck I'm doing." And all of a sudden, he has 500,000 followers overnight. 500,000 followers from posting, "I bought this stock. I made $300, but I don't know what I'm doing." 500,000. I mean, that's crazy. I think there's a lot of PR firms out there that probably want to learn from this guy on how to get brands followed. Yeah. But yeah, if you want to have fun, if you're on Twitter, do hashtag TikTok investor. And look at all those feeds, and you'll laugh. At least I do. I laugh at those. And some of it's just sad, honestly. So many Bitcoin people out there. I have no idea probably even much about Bitcoin, but they're just buying it.
People are jumping into this market with both feet. And it is really kind of interesting because they're accepting the fact that through investments, you can create wealth for yourself and your family. Now, whether they're going to be successful as long-term investors, we'll just have to see. We've seen periods in time where people have tried to make a living from day trading. Right. And then after that started, what became is kind of a cottage industry where people popped up with programs for helping people to day trade. And the only people who made money there were who sold the programs to the day traders.
Right.
Because they were just such anomalies in the marketplace. This TikTok phenomenon is an absolute riot to see some of these influencers talk about different securities that they invested in.
Right.
And then there's a little disclaimer at the bottom. It's just hilarious.
I'm going to open up my own TikTok account. I'm going to say like buy IVV or buy VTI, right? And see how many people go and buy the S&P 500. I'll be doing them a favor in the end, actually. But yeah, we're in this weird phase now where 95.9, so 96% of stocks have increased in value over the last 12 months. So really, it's kind of hard to pick a stock that's not making money. And we're also at all-time highs. So what could go wrong, right?
We shall see.
We shall see. I just hope it doesn't.
Maybe advisors will come back in vogue someday.
Maybe. I just hope that it doesn't discourage them after the fallout. It doesn't discourage them to continue to save in the market in an appropriate manner for the long term. But we definitely feel like we're at the adults of the playground watching the toddlers beat each other up at this point. All right. Well,
moving on from there.
Yeah, I think that's going to be a top 5 for maybe another few more months. Let's talk about appropriate investing techniques. Time to rebalance, huh?
How about that? Market's done very well, as we just got through saying. That's a good thing. But what that means for investors who have a properly diversified account is that the allocations may be a little bit overweight in equities relative to their fixed income. So it may be time to rebalance. You should check your account, make sure that you have the risk tolerance for your current allocation, or if the allocation has gotten a little overweight to equities, go ahead. Take some of those profits, reinvest them into the fixed income side of your portfolio, harvest those gains, and move on.
Yeah, I noticed in our own portfolios that small cap stocks had done so well in the last few months that they were overweighted pretty significantly in the portfolio. So this is when it forces you to take gains. So we sell high and then we invest in something else in our portfolio that maybe has underperformed the averages. I think all the averages are up, but all the indexes are up, but let's say maybe real estate's underperformed, or obviously bonds aren't going to perform the same as stocks. So I think it's a great time to be looking at that now, which I think ironically is when most people look at it, because it's tax time. We think more about money right this time of year than maybe midsummer or in the fall. All right. I found an article this last week I thought was interesting. Over in Europe, there are some people that are getting paid by the mortgage company. Isn't that crazy?
I just refinanced last year, and I was feeling pretty good about it until you brought this up, and we read this article.
So this is how it works. So it basically, the head of mortgage, it was tied to, so we call a variable rate here. So it's tied to the, I believe it was the Euribor. So it's tied, so it's Euribor plus 0.25%. But the government there has allowed rates to go negative. So if the rate is negative 0.5% and you're paying plus 0.25, that's negative 0.25% that the mortgage company now has to pay you to have that mortgage. Which I'm still trying to wrap my head around it. It must be the government paying that, because that would mean all the mortgage companies would go out of business. So
that is some funny math. I'll tell you what.
We always talk about, we don't want negative interest rates. Here in the U.S., we've never had negative interest rates. Now, we've done other techniques to make it seem like that, I guess, but we never officially have had negative interest rates. And obviously our European friends in Portugal and Spain don't have a problem with that. I have the article right here in front of me, and I'm still trying to wrap my head around.
Kudos to them.
Okay, well, here you go. Here's the answer. It's a state-owned mortgage company. So Portugal's state-owned mortgage company says 12% of its mortgages are currently carrying negative rates. So 12% of mortgages there are paying the mortgagee, which is a little different. Think that would happen here? I don't think that would ever happen here.
I don't know.
I feel like there's something, mortgages, you try to be vigilant at the first 20 pages, and then after that, you're like, fine, I'll just sign.
Yeah. Sounds like a political policy.
Right. All right, let's talk about consumer confidence.
Consumer confidence is up, Casey.
Yeah, apparently.
In February, consumer confidence came in about 90.
Okay.
This past month, the current month with March reading, came in at 110. That's up 20 points in 1 month.
Wow.
Consumers are very confident about the recovery that's happening in this market and in the economy itself. And now what I find interesting about this is that during the pandemic, all the stimulus payments that were made, all the people that worked at home and didn't have to spend gas, for example, lunches out, dry cleaning for their clothing. With all that occurred, and all the stimulus that was put into the market, into consumers' pockets, savings rates are at an all-time high. They're estimating it's up $2.8 trillion of savings in consumers' pockets. You add that to this consumer confidence level, so you have cash, you have confidence, that's going to equate to spending. Spending is going to be great for the economy. That's going to give it another boost, for our economy. And our GDP is about 2/3 consumer spending. So consumers are well oiled for spending. They are ready to go, and they're confident about it.
We've talked about that a little bit before. You see that in what I call street signs. You're out there looking around, seeing what's happening.
Exactly. I think of it as anecdotal evidence.
Right. You look at vacation rentals are all gone. You look at anything that opens up. Disney's talking about they're at capacity at Disney now. All of a sudden, now it's a reduced capacity, I believe, that they're still operating under, but still they're hitting that capacity, which means there's more people who want in the front door, right?
Right, than they're letting in.
Exactly. Airlines are talking about an increase in future ticket purchases.
I made a ticket purchase.
Where are you going, Brad?
I'm going to Aurora, Illinois.
Yeah.
Play a little golf with some friends, see my mother.
Nice.
Haven't seen her since COVID occurred. So, I'm getting my shots. I'm feeling confident. If I'd been asked about this consumer, confidence,
right,
I would have given a high score as well.
Huh. That's good to know.
Yeah.
Have you filed for that?
I've been meaning to talk to you about this.
I think that's good for the economy. It makes me question a little bit about all the extra stimulus that the government's trying to do, and if that's really necessary, and if they do go through with it fully, does that overstimulate the economy, or are we in a high inflation period? That could be a real dangerous situation for us.
Inflation is the concern. All this money chasing too few goods and services is going to drive up. However, with unemployment being as high as it is, estimated 10 million people are still out there looking for work. That should hold down core inflation for a while.
Well, but I don't understand that either. I drive around and I see help wanted signs everywhere. So maybe those are just people looking for work in states that are still, for the most part, shut down. But I think it's become more advantageous for workers to stay home. Here we have a few horse farms not too far from us, and when I talk to the owners, they say that they can't find any help because what they would normally pay $600-700 a week, people get that from the government now for filing COVID claims and staying home. So that's going to be it's going to be interesting to see how this all plays out.
I agree, and it's really a behavioral issue as well as a financial issue at this point. People have not worked for quite some time if they've been out of work, and they've been getting paid. That's a unique combination.
Yeah.
It's a very comfortable combination, and we'll see if we can pull them out of that comfort zone.
Non-American. Really think about it.
Yeah.
All right. Well, let's transition a little bit into Biden's new tax proposals. I have here in front of me, it was actually emailed to me this morning, a proposal from the Bernie Sanders side of the Democratic Party. Normally, we didn't pay attention to any of this, but in this situation, this stuff could be real. They could really easily pass this, and I guess I think a few concerns for clients that I have is no longer a step up in basis. So when you pass away, your stock, if it's not inside an IRA, if it's just a brokerage account, if you paid $5 for a stock and it climbs to $10 and you pass away, your children or beneficiaries would inherit that money and pay. They would have $10 as their basis. So if they liquidated, they wouldn't have to pay capital gains tax. They're thinking about reducing that to where there would be no step up in basis. They're also talking about right now, if you have $11.7 million, you can have an exemption. So your estate would have to be worth more than 11.7 before any federal tax would kick in.
And twice that for married.
That's right. That's per person.
Right.
So now they want to reduce that to 3.5 million. There's an article in the Wall Street Journal.
And when you combine those two aspects of capital gains and a reduction of the exemption. Sure, we can talk about stock all day, but what about that small business owner? What about that farmer?
Right.
What about that landowner? What about that apartment landlord?
That's
what about these hard assets, if you will, that are less liquid? They still have to, they're no longer get the step up in basis on that, nor was it passed tax free or estate tax free to the next generation if it's over these exemptions. So this could be a real problem.
That's one of the reasons why it was pushed up so high for so long. I mean, even during the Obama administration, we had $11.7 million exemption.
Well, assets have just inflated, greatly over the past years, and this exemption really should be able to keep up with that.
Right.
Rather than reducing it in an inflated period, they should be raising it in an inflated period.
Well, now I read in the journal yesterday that there's even more progressive people in the party that want it to be $1 million exemption. $1 million exemption, that affects a lot of people. They say, oh, it's the wealthy. I don't think if you have $1 million today that you're wealthy at all.
No, not at all. I mean, you have a home, you have a retirement account, you have some assets that you've accumulated, and let's say you inherited a lake house, from your parents years ago.
Right.
I guarantee you're well over that $1 million mark.
Yeah, it's a reach. And what concerns me is that it's within their reach because there's really no balance of power right now. So that's the part that concerns me. Now we can get in. Well, we shouldn't get in. We don't have time. But they really want to rewrite trust and family limited partnerships, which would really hurt those that have done a lot of extensive planning over the last few years. So it's this is not even the income tax portion. The income tax portion, I don't even know how to cover that right now because they keep promising if you make less than $400,000, nothing's going to change. But I feel like we've heard this from every administration ever, but it does change for those under $400,000.
It's a slippery slope. Once they decide that that's an area that they're going to go after,
right?
Nothing, is a hard and fast number at that point in time.
And those making $400,000 or more are the ones that are employing most of America. So I get a little concerned when there's, they're trying to paint those wage earners as bad people and how they legislate all this. And then this is America. You should be able to create a company, grow a company. Right? You should be able to be in sales and do well and sell and make those commissions. And now we're saying, well, you can only do so good. And then after that, you're going to pay a really high tax rate because you don't deserve more than that. That bothers me.
If on the other side, incentives do change behavior. So disincentives will change behaviors as well. They may work, up to that $400,000 mark.
Right.
Let's say they do. I mean,
right.
They go on vacation. Bag all the sales till next year.
Right.
Yeah.
Well, there's a lot to be determined. There's a lot of information out there, and I will say it's bad information. I'm getting emails from clients, forwarded emails, that Democrat Party wants to take away their 401k plan and eliminate it and use it for their programs. There's no proposal for that. There's talk, obviously. There's talk that they would like to, maybe they should do this, but I've not seen one email forwarded to me, nor can I find a bill that says eliminate all 401k plans. So you have to be really careful where you get your news from. And I'm not saying you have to go to CNN or Fox because sometimes that information is not always accurate or they omit stuff that should be in the article. But just be careful. You need multiple sources these days.
You really do, and you have to be able to discern those sources because so much of our news today is really editorial.
All right, Brad. Good chat. We'll see you next time.
Sounds great.